All right, everything looking good. We are live. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on Wednesday, April 12th, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so let's go ahead and jump right in. So here we have TNX. We see we came down here. We did put in a recent low. We've had a bounce since then, back test the 8, the 200, and almost to the 21 and the 200 simple as well. The key area to watch is basically, we're right here at this cluster of resistance. If we get back on top of it, it likely holds up for now and we retest the top. If not, we're likely to hold down here lower. We do see momentum starting to pick up. We see a hard sell signal. A little bit of confusion around this area, I think, in general in the markets. Next, we look at the VIX. We have this descending channel right here. We're very close to the bottom of the channel. So volatility is very low. Typically means we're towards the end of a nice run. So as we see volatility start to pick back up, potentially test towards the top of the range, somewhere back in the 30s, we would expect that to cause pressure on the markets. U.S. oil, so we got that nice back test, the 821 bull cross, the gap up, lined up perfectly with the OPEC cuts, and we finally retested the 200 simple for the first time since we touched it way back here in August of 2022. So we touched the 200 exponential twice, finally got to the exponential again, and then to the 200 simple. So that was our target hit. We can get rid of the super official squiggles. And now we see, basically we're on top of the 236, which was acting as a hard resistance. We're at the 200s. So if we can get back above this level, maybe that was it. That was the bottom, and we can move up from here. We did touch our blue box, which was essentially the top of the range we were expecting to hit. So maybe that's it, and we're ready to go to the upside. However, this is a clear pivot in the market at the 200 exponential and simple, as well as the 236. If we do get rejected here, then we start looking for the 382 as our next target to downside, closer to like $60. So the Dow Jones is next. So we did get back on top of the 200s. They are blue and flip to the upside again. We still have a lower high for now. So we're still looking at this inverted head and shoulders, a bullish pattern. We were looking for that move back up to test the neckline. We now have essentially this little sloping uptrend, which would act as resistance. Also that retest of the next fib there at about 35K. So if we get up to that level, that's going to act as resistance. As long as we're above the 200s, should it act as support. So moving on to SPY. So we did see a pretty aggressive selling coming in towards the end of the day there. At this point in time, though, we're just squeezed in this little resistance here in white. We have the heart line of the ascending channel here in an orange dotted line. And we're just squeezing into that little tip in between the 200s. If we break through this to the upside, we'd likely test the top of the channel, somewhere closer to like 445. If not, we're probably going to retest towards the bottom of the channel, just under like 400, maybe 395. It does look like we're getting pretty tired here. Each previous time we saw the bulls take control and the red highlighted background, hard sell, and then we broke down pretty aggressively. Sometimes less, sometimes more. But here, every time has marked the top. So it seems more likely than not this is going to act as a top once again. Obviously, the stochastics have acted like a beautiful indicator here. As we see, they've basically caught all the bottoms and all the tops. So triple Qs recently put in our new highs right here. We're back testing that previous support. If that acts as support, it's not going to look bad. We do, however, have some bearish divergence between our clear higher high here, and then we have a lower high on our stochastics as well as the TDMACD. We're back on top of the 200s, and they're sloped to the upside, so that's good. So we would expect this bearish divergence to push us back down to a key support, and we would expect that support to hold. So as long as we're in a market and that market has 200s sloped to the upside and price actions above them, we have to stay bullish. So even though we're getting a hard sell signal and bearish divergence and we're likely to retest the lows, those lows are going to be a buying opportunity. And I mean the recent lows, not the cycle lows or all-time lows or whatever. So the Russell is still very, very weak. We'll see if this one is just lagging and that's why it's so weak, or if it is leading and the other indices are lying to us. But we see the Russell has lost the 200 exponential and simple, lost the slope again. So it was starting to look good there for a bit, and that story evaporated relatively quickly. We see a bunch of green histograms to the upside, barely even got back up here to retest the 200s. So this thing looks like it's a little lagging behind on the momentum. If it does come back up here, you know, as the indicator oscillators become exhausted, we would expect potentially a rejection around like 185. The Russell does not look good. So XLE energy, we saw that gap up on oil, obviously, and that pushed up these energy prices. Not far off of the all-time highs for now. Picking up momentum. Bulls are in control. Again, we have seen this result in a quick top shortly afterwards, which is typically what you see when you don't have a trending market. You know, you see the bearish control zone, hard buy signal is a good buy. The bullish control zone, hard sell signal is a good sell. But really, what are we doing? I mean, it's just chopping around sideways. We've really just been going sideways in this range, you know, for over a year now. But it does look bullish, much more bullish than most charts. All right, so let's jump over here, take a look at tech. So DXY first here. So very important what's going on with DXY. So this is exactly what we discussed over the last couple of streams for the ideal situation. We finally get the pushback up here. We retest 8, we retest the 21, we get rejected, and we close down at the lows. And now we're 1 or 2 candles away from taking out that previous low. And that is the ideal scenario for us. One, because we're long on a bunch of stuff, and weakness in the dollar, you know, is going to make good trades for us. But also because that will give us that potential for bullish divergence. So we have our initial low, and then we have a lower low, but a higher low here. That gave us the bullish divergence that pushed up and backtested the 200 exponential. So now here we are back at the bottom of the range again. We see we have exited the bearish control zone and we got the hard buy signal. Here we exited the bearish control zone and got the hard buy signal. And then right afterwards, we push down to a new low. So that's what I'm potentially looking for right here, just to close below 100.8 roughly. At which point in time, you know, we saw the pushback up, the 821 bull cross. And then in this case, we'd be looking for it to get back up to 200 simple. So this could give us one last little push over the next couple of days or weeks on our risk on assets, and then see a relief rally potentially or short squeeze in the DXY. As this thing is pretty beat down. It is definitely pretty beat down. And you would expect it to come back up here and back test the blue slope line and then see it turn red and then go much lower over time. All right, so jumping in here on Tesla. So we see Tesla is rolling over. We did get the push all the way back up to 200 exponential and simple, rode it all the way to the top, took profits at and around the top. And then we saw it break down. We saw it come back up and try to form a little double top. I did think there was possibility to get up to the 200 simple, which would have really been a double top. But it just didn't get there. And then it went ahead and rolled back over. 821 bear cross. We see some selling coming in at the end of the day, closing near the lows here. The real level to watch is going to be that 166.66 level. We have our fib here from the low to the high. We came down to the 382 the first time. The 0.5 would be the next target. So around 150. We'll see if that holds, but that could be a potential buying opportunity for this 53% scalp if we do get the pushback to the upside. So Microsoft, we're not sure if this is going to end up being the macro top, but it is a perfect retest from the high to the low up to the 618. If that does end up being the top, it is the top of our channel, the third little drive of our little mini push up here. And then likely we'll see when and if we come back down here to the 0.5 or the 382. We're looking to buy that area as support for a potential beginning of a new bull trend, as we're now above the 200 exponential and simple, and that is our trend following strategy. So as that takes place, we would expect to push down here, a hard sell, exit the bullish control zone, but again, met with buying as we retest this previous top, potentially the bottom of the channel or even the 200s. But again, you know, this is the clear, when I look at this chart and you tell me what's the highest probability of happening here, you know, when we have a bunch of blue lines here, blue slope line, everything's good, that's a bull trend. There's nothing to worry about. You know, consistent uptrend. When it's red like this, we're in a bear trend. Obviously, we want to de-risk, short, hedge, whatever. But when we're back on top of the 200s, you know, that's the potential beginning. I mean, it sounds crazy to people because everybody thinks we're going into a big bear market or depression or whatever. Maybe we're not. Maybe this is the beginning of some new technological age fueled by AI and inflation. You know, we see when we're under the 200s, you know, that's a bear market. And then once the trend begins again, I mean, Microsoft has been just straight trending up and to the right. So, you know, I'm going to respect it. As long as we're above the 200 exponential and simple, I expect over time this thing to trend straight up and to the right. So that's our M in magma. Let's look at the apples. So we talked about this area and how this was the perfect area to short the last like 4 times we got up here. Obviously you didn't know on the first time, but the second, the third, you know, and then here we are at the 4th, popped out of the top here. Obviously that would have been a perfect entry so far. We'll see what happens. I do expect at least a back test of the 200 exponential and simple. More likely than not, though, we come down here to about 141. We see bearish divergence. We have a high here. We have much lower high. We have a high here. We have a much higher high, showing exhaustion by the market. That essentially the price action was being pushed to the upside with minimal actual buying. And obviously we know eventually that's not sustainable. So it does look like that's rolling over now. We'll see how far we get. Don't want to get too greedy on this one, as typically shorting the strongest stocks, not the best. So if we move on here to G, we got our Google, a little googly. So same thing, bear market. It's been very, very weak, and we're just now reclaiming the 200s. So people always feel like they miss their chance, they miss their opportunity, they miss a good trade, they miss the, you know, next bull run. Well, here it is. Google's lagging behind everything else. A lot of stuff's already had a nice run to the upside. It's way up here, you know, retracing the 50 or 60, 1.8% range. Not Google. Not Google. Google is still lagging behind. They even try to make up their own little AI and, you know, boost their stock price. Here we are at the 382. Next move would be that 0.5 of the back test of the 236. So we're very close to that. But, you know, realistically, if this is going to end up being a new bull market, you know, you're not trying to play an internal retrace. You're playing back to the highs or new all-time highs. And if you did miss the party, miss the trade, the action, the excitement, you know, still 44% off of the all-time highs. So if you do believe there's a new bull market and it's just getting started, 44% just back to the highs. And then after that, blue sky breakout, maybe. So Meta. We got the other M in magma. So this one had a nice run up here. Back testing the 618. Again, very aggressive move. Left behind a pretty big gap. At some point in time, it's going to come back down here. Back test the 200 exponential and simple. Again, going to be a buying opportunity. Likely find support around the 382 at about 156. Looks pretty toppy here. Definitely bearish divergence. So definitely a lot of bearish divergence on tech. But when we do get those sell-offs, we would expect them to sell off to key support and then that support to get bought up. Amazon does not have that same bearish divergence, but it also had this pathetic move. Obviously, the only thing keeping Amazon afloat at this point in time is bullishness on Amazon Web Services. And, you know, they're giving you reason not to be bullish there. So I would expect this one to continue underperforming for now. And maybe some of these weak stocks, some of the underperformers, will end up leading us to the downside if that is going to be where we end up. So that's our magma, little volcano getting ready to erupt, meltdown. So let's take a look at some cryptos. More like melt up, am I right? So Bitcoin on the daily. So we got back above the 200s, bounced very nicely off the 200 simple. That's where we took our long from. I did take profit through this area. It looked to me like distribution. May still end up being distribution, but we are running into some resistance. I moved some of those profits, some of those positions into altcoins, which have literally done nothing or gone down. So obviously the wrong decision was to sell resistance in this case, at least for now. So not much really happened here. We consolidated for a while. It was a bullish consolidation. We talked about it on the last stream. It's the same thing we did here. We pushed the upside. We went sideways for a bit. We had a little pull back, but we did it to a higher low, and then we pushed up again. This time we came down to the lower low. That was a perfect buying opportunity. The 200 simple. We were waiting there like an alligator in the water. And, you know, when you take your dog out to the pond and you walk it a little too close, we pounce. I'm sorry it has to be like that. You know, afraid Fluffy's not going to be coming back this time. And at that point in time, shot straight to the upside immediately afterwards. You You don't have to be a genius to figure out why exactly that happened. They're like, oh, it's the bank meltdown. It's probably just the 200 simple and the beginning of a bull market, or so it seems. And then we talked about this exact scenario, consolidating to the side as the indicator oscillator trends to the downside. And I literally talked about this exact scenario. A bunch of red histograms gets down to the slope, and then we get a dead cat bounce off of the slope. The same way we bounce and see resistance when we're under the slope. So obviously that played out perfectly. We pushed to the upside. Is it going to be a short squeeze? Does it have legs on it still? I mean, we were looking for 30K. That was our target. I said between 30 and 32. I'm not going to push this one. So there's a possibility that Bitcoin just kind of goes sideways here. There's a possibility we'll look at the futures chart where it actually goes up about 10 more percent. But realistically, this looks to me like unless we see this start trending to the upside aggressively, it's likely going to print bearish divergence, because now we have this really aggressive top right here with that sideways consolidation, and we've already pushed up to a new high, and we're still well off of that area. So we need to see a bunch of momentum come in here, a bunch of buying, sustained upside over time, or we will print bearish divergence. Now, that's hypothetical scenario. If we just run to the upside here long enough or go sideways long enough, and then, recharge and keep moving, it invalidates the bearish divergence. So don't get hung up on that part of it. What we're looking at, really, the most important thing, you don't have to be a genius to see this, is we basically had this double top scenario right here with a pretty clear neckline around this level. Now, you could argue that the neckline's up here and this was an overshoot. You could argue the neckline's here and this was an undershoot. Regardless, there's a bunch of consolidation in this range, a bunch of support we bounced off of around this range right here as well. So now we're back testing that, what was support, as resistance. So this is a very, very difficult area for us to get through because people kept buying that level when we came down to it before. So now when you come back to it, oftentimes people will sell that level because they're just happy to be out of their position. So it doesn't have to happen like that, but be very, very cautious that, the area where we likely top out, or at least find a short to medium term top, is probably going to be a strong area of consolidation from the previous run. So now over here on futures, so looking at this, we talked about this exact scenario. It's played out very nicely, but we see the 5-wave structure to the downside. We bounce off of the 0.5 in either green or white, depending on if you go from the COVID low or the cycle low. From that point in time, we got the little gap up here. We back tested the 200 exponential and simple. Again, nailed the absolute buy zone. And then we see we're pushing up here, and our target to the upside, we have back tested the 236 in either green or white. And then also the top of our little channel here in blue. So somewhere around where we're at now, very, very close, give or take like 10%. Well, really either now or give 10%. So we do see that hard sell coming in. We did exit the bullish control zone. It looks like it wants to have at least a temporary pullback. If we slap a little fib on here and push it up, let's say we do get one more little push slightly higher here, where those fib levels kind of line up. We can see the 236 lines up pretty good with that back test right there. The 382 lines up with the 382 in white right here. The 0.5 at the lows right there and right there. The 618 exactly at that low. So, oftentimes and then here we see the 786 at that peak right there. Oftentimes when the algo picks out a spot, you can kind of figure it out. You can kind of guess. Now, it doesn't always work, and, you're hypothesizing like where it's going to top out at. But if we look at it right here, it lines up with a lot of stuff and it looks good, but not quite as good. So it looks like the algo is still trying for like one more push up. We see the exact touches, exact touches, exact touches, exact touches. I mean, that's not coincidence, obviously. Or maybe it is. Maybe it's complete coincidence that, computers are using math to do math stuff, and we're also replicating that. That could be a complete coincidence. But I mean, if it happens enough times and we can measure it and figure out what these computers or, aliens or whoever's trading Bitcoin futures chart, we might as well use it to our advantage. So looks to me like this really, really wants to push up Bitcoin futures to 32,295. So when that exact thing happens a few days from now or whatever, just remember, told you so. There you go. So I won't say it then because I already said it now. But that's what it looks like. And then after that, we'll look for this 5-wave structure retrace, either a 236, 382, maybe down to the 0.5. But maybe just some kind of back test to like 25K. I'll be happy with 25. Maybe it gets down to like 19 and people freak out. I don't know. I think 25, realistically, anywhere in the low to mid 20s is a pretty good buying opportunity as long as markets are looking the way they do. And that's a lot of stuff looks bullish. So ETH, so they did some more stuff and a thing, and now everything's good, guys. Now get bullish on ETH because they changed it. Like the old ETH that they used to have, it was trash. That was complete garbage. But the new ETH that they have now after the upgrade, I mean, you should be all in on it. It's crazy that you're not already. I mean, so just get with the new ETH. What's different about it? It's got a new camera, front facing and back facing. Charges faster, better battery. Or wait, that's the iPhone. Yeah, I don't know. I don't know what changed about ETH actually. You might have to look that up on your own. But the actual chart looks okay. Looks a lot like Bitcoin's chart. Obviously, nobody cares. It's either, am I right, guys? It's either Bitcoin or shitcoins. Like ETH is just in this weird spot where it's like, oh, it's not even a shitcoin anymore. Like, but I mean, might as well just get Bitcoin, right? Maybe not. Maybe I'm the only one who thinks that way. So total weekly market cap. So we banged our head here 4 weeks in a row, and we're finally pushing up out of this. The absolute last thing we want to do, the worst possible scenario, I mean, other than just going to zero and all cryptos going to zero along with it, would be just closing below that 1.16 level. We don't want to push up here and then get rejected. In the meantime, we're above all the moving averages. You know, we're basically like confirming a breakout right now. Bullish control zone, all green histograms above the slope line. The slope line's blue. I mean, that's literally what we look for. So, you know, this is confirmation close above that previous resistance. And then, I mean, at what point in time do you just admit that crypto is bullish, stock market is bullish? I mean, I don't know. I just accept the fate of the markets and, you know, just let the market tell you. I think that's the best thing to do because, you know, it's easy to come back later on and be like, oh yeah, it was bullish because of this. And I didn't see it at the time. You know, if you just trust the indicator oscillators, and it doesn't have to be mine. I mean, obviously the ones I use, the ones I created, they're the best ones for sure, without a doubt. But if you didn't like them or whatever, you know, there's other ones that work too. And like, let's be real here, guys. Okay. And I don't want to like devalue my brand or anything. I mean, it's not like really a brand, but you know, I'm not trying to call my own kids ugly here, but there's like only so much information that is like your input for what your indicator does. So if you have some like crazy strategy or like crazy indicator that's like super complicated and looks like absolutely insane on the screen and everything, it's probably just overcomplicating something super fucking simple. So just keep it simple. And it works the best in my opinion. So I made the simplest indicators ever, and you can use them if you want it. If you just like simple stuff, if you want really complicated stuff or super expensive stuff, there's plenty of that out there too. So help yourself. Bitcoin dominance on the weekly. So this is against everything. And again, so this is where I kind of made the wrong play. Well, as of now, we don't know what's going to end up happening in the long term, but it's where I made the wrong play. So whenever we're trading in a range like this, obviously we have support in green. We have resistance here in orange. I'm buying support. I'm selling resistance. I'm buying support. I'm buying support. I'm selling resistance. So we sold resistance right here, basically. And by selling resistance, I mean, we left Bitcoin and we went into altcoins, you know, anticipating that we would get rejected here. Bitcoin would lose dominance and then it would go into altcoins. And then we would go to the moon and come rockets for everyone. And Shiba Inu, Dogecoin, Daddy or whatever. So, but that didn't happen. That didn't happen. The altcoins are trash, which we knew. We knew they were trash. So it's only fitting that Bitcoin goes straight to the moon and we end up with a bag full of altcoins. Everyone else gets filthy, sneaking rich, and we just end up with a bunch of trash altcoins. So it'll make for a good story though. So I'm not even mad about it. As long as some of you guys. No, but seriously though, that's basically what happened. So obviously that was the extreme, but 821 bull cross right here. We banged into resistance. Seemed like we're going to top out right here, roll back over. Bullish control zone. Looked a little bit tired here, but no, still strong. Momentum still in its favor. Bitcoin is really trying to steal that market cap. Now, it's easy for Bitcoin to steal a bunch of market cap from stablecoins because, you know, the market's getting more and more bullish based on momentum. Now, it's all the same people's money. There's no new people coming to crypto. I mean, you would have to be an absolute like psychopath or like just full on retard to like just get into crypto at this point in time. You're like, what was that thing, that Ponzi scheme that just imploded and everybody lost all their money? You know, the one that like put down all the banks and the government's like real mad about. I'm thinking about investing in that. What's it called again? Oh, crypto? Yeah, I'll give it a shot. I'll give crypto a shot. I just don't think there's a lot of conversations like that happening. Maybe I'm wrong though. I don't know. Maybe the geniuses are swooping in here. They're like, you know what, that crypto thing, I think I'm going to take a look. Now's the time. Maybe. So truth is, money flowing out of the stable coins back into Bitcoin faster than it is into the altcoins. That's got to be the fear trade, I guess, the gold, alternative trade. When we look at the Bitcoin dominance, subtracting out those stable coins, again, we see we don't have that clear defined range. If we had that same range, it would basically be something like this. And this red line would be the equivalence. So if we just flip back over here really quick, this was that range we were trading in, green and orange. And then instead of getting rejected right there at the top and then going back down to the lows, we see when we factor out the stable coins, we started putting in higher lows right here. And then we crept back up. So we're actually much more bullish Bitcoin versus altcoins right now than Bitcoin versus stable coins versus altcoins. So very interesting. But again, we had that consolidation and Bitcoin looking like it wants to retest that previous high right there. Momentum still in its favor. So yeah, I mean, honestly, we don't get to say it often, but it feels good to be wrong sometimes, right? So BNB, so we talked about this potential trade setup scenario, 821 bull cross. Looked like it started to move right there and then got rejected pretty quick. But I mean, the trade setup's there. That's it. It's either 30% upside, excuse me, 30% upside if we backtest the 618, or if we lose the 200s, we don't want to be in this. We'll wait it out. But 6.5% stop loss, 29% take profit, 4-to-1, 4.5-to-1 risk reward ratio. But realistically, just trading the range again. So potential best buy area would be down here at the white support. But if we do break down below the 200s, I'm going to wait until it gets down to a key area. I don't want to just ride it all the way down and then be like, all right, hopefully it holds here. No, I'd rather get stopped out on a trade up here. And then I'd rather enter another trade down here just in case. And that's partially my strategy. I think some people will just like hold out. Well, I know a lot of people will just hold out in a trade a lot longer, or quote unquote an investment. But not me. I would rather just cut and run and then reevaluate, because one thing I find is if you're in a trade and you already believe in that trade to begin with, and then the trade starts to turn against you, a lot of times you'll start to like create reasons why you should stay in that trade. If you immediately just take the small L, like you talked about in the beginning, like right here, we enter this trade and immediately goes against us. We just take the L. We can reevaluate with no bias because we already took the L. It's locked in. It's done. It's over. If you're holding it and you start like extending your stop losses down here, and then next thing you know, it finally like breaks down from here. And then you're like, oh man, this is where I should be buying. And instead I'm like selling. That's like worst case scenario. So for me, I'd rather like keep it pretty tight, take the stop, get out, and then reevaluate. That way I can do it without bias. And a lot of like fund managers and stuff, depending on situations, whatever, at like the end of the year, they'll just close their positions, take profit, be done with it, start a new year. And I find that sometimes even, you can do it every quarter, you can do it every year. You can just do it every time a stop loss gets hit or would potentially get hit, and just practice taking small losses. And then it's not that big of a deal, and you don't end up, small losses usually end up turning into big losses if you wait long enough, at least in my opinion. So basic attention token, back testing the 200 exponential and simple here. We talked about this potential scenario. Obviously, none of this is financial advice. I'm not your financial advisor, blah, 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 blah. 54% upside, 14% downside. Same thing if we lose the 200s here. This is like a slow starter trying to like get going. So, and you can insert any other random trash ticker up there in the corner, and that's fine. They're all equal trash. This one happens to like do something, and it has a clever name if you like baseball bats or like flying rodents or guano. But I mean, the truth is, any other random trash asset, crypto, whatever, if it looks like this, it's the same trade setup. We're looking for the backtest of the internal retracements at first. If they're strong enough for long enough and we build up momentum and we flip the 200s to the upside, we're looking to retest the highs. And then after that, it's Fibonacci extensions. All right. Speaking of trash cryptos that have done nothing since we entered them, could have been riding high on our Bitcoin train, Matic. So, yeah, this thing is dangerously close to losing some key support. Actually, I might not have it. No, we have it here. Okay, so essentially, you know, we bounced this ascending support, bounced it, and now we're at it again, and we're basically like borderline losing it. We don't want to get like bearish on this at the moment. But essentially the 821 bear cross, like we were hoping the bull cross would take place, and it failed. What I'm looking at though is actually, I know this is straight up trash, but there's some important stuff that we can talk about on this chart. Did a little prep work. I know what you're thinking. That's crazy. Why would you do that? Everything is perfect when you do it right off the cusp. I don't know. I just, you know, spent like 5 minutes getting ready for once. So get ready to have your mind blown. Tell me if you guys can even tell a difference. So what's up, Hex Evolve? Good to see you, brother. Just need to train an AI to do your live videos for you. Yeah. Oh, yeah. Well, that's my AI down in the corner. You didn't know that I'm a robot? You can't tell. What's up, Mr. Lex? Good to see you, brother. Crypto Deli in the house. 25 would be okay for me. 25,000 on Bitcoin. I wouldn't say that it's not going to happen. Okay, so let's talk about this random trash crypto right here. So, all right, so we'll turn off our indicators, we'll turn off our drawing tools, and we're just going to look right here. So basically, when we broke down below the 200 exponential and simple, this was our bull trend. Here, it's in question. You know, we're fighting, not sure what's going to happen. And then eventually we start closing a bunch of times underneath it, and then we get the back test. And that for us is when we get bearish. Once we're below the 200 exponential and simple, they flip bearish, we back test and get rejected. That is like final confirmation that this thing is trash and it's getting ready to melt down. And then obviously right afterwards, it completely melted down like the trash that it is. So on our chart here, this red circle represents the 200 exponential and simple flipping red for the first time and us being underneath them. So sure, we can scalp this last like bullish trade to the upside, but at that point in time, we should be selling into the 200s or shorting for the downtrend, which obviously worked out perfectly because this thing went straight to zero immediately afterwards. So after it went to zero, obviously we know this is our red bear cross. So we're going to skip forward here a little bit, and we're just going to look at this little area right here. And here we fight, hit the 200 exponential and simple, both still have a negative slope. Here we get above the 200 exponential and simple, 200 exponential gets a positive slope, 200 simple still a negative slope, find support, break down below them again. And then here we see the first time when we cross above the 200 exponential and simple, they both have a blue slope. The 8 and 21 are green and cross to the upside, and then we're above them. That is our bullish buy signal for a bull market, a bull trend, whatever. So just using that strategy alone, if we did nothing else, okay, absolutely nothing else, and we just sold below the 200s, bought above them when it flipped, we skipped out on 48% loss. So if you had $100 in the random trash crypto, in this case Matic, and then it went down here, you lost like 90% of it or whatever, and then it rode back up here. You avoided all the time you might have capitulated, assuming this was going the rest of the way to zero. It only went most of the way to zero. And then you're able to just get back in with a defined reason why. And you avoided that 48% loss from here to here. So now you have basically twice as much crypto. Because if you had $100 and it went down to 50, versus if you had $100, you got out and then you buy again at 50, you know, or 50% down, you get twice as much. So we doubled our money by just not taking the L on this. So that's very, very important. So that's one aspect, obviously, of what we use here. The 821 bull cross, the 200 exponential and simple slope, all that good stuff for trend. But look how late to the party we were, because that had us buying in here at like 89 cents, obviously. And the low down here was like 35 cents. So it already had like doubled before that gets triggered. But that's our long-term buy-sell signal. All right, so that being said, so once we broke down in here, we saw one of our most favorite things take place. And this is what I always want to see for a bottom or, you know, for a top, depending on the scenario. We came down here, we put in a very aggressive low. It gets bought up pretty aggressively. We get a hard buy coming out of the bearish control zone, bunch of green histograms. That's the bottom. That's what we're looking for. But we push back up here and can't get above the 8, can't get above the 21. And while that takes place, something very, very important happens. Price action goes sideways, but the histogram is trending up right here. And when it trends up, it gets above the slope line. So the slope line is red, it's blue, it's red, it's blue. But the most important thing is that we're above it. Once we're above that level, once we're above that slope line, that is one of the key indicators for us that the bottom is probably not in, but it's very close to being in. So what we're looking for is a push down lower with divergence. So we see here afterwards, you know, that was our big dump down there. We see here another dump down to a new low after that. And that's where we're looking for that divergence because it lines up at the selling here, but we're on top of the slope line right there. So we have bullish divergence developed once we're on top of the slope and we come back down to find support. That's very, very important. That's one of the most reliable buy signals we can possibly get. Once the slope line is back on top, or once the histogram is back on top of the slope here. So I marked on here a couple of times so we could tell what does it really look like when we break down below the slope. Why do I use the slope on the TDMACD? Why is that so important? Why does it work so good? Why do I use the settings that I do? Why does any of this shit work? Should we just, you know, flip a coin every morning and say bullish or bearish? Sure. So here is the red. This is obviously the you know, bullish divergence buy in blue, and then all the other sells and buys are marked here in green. So let's look at the first sell right here, and it's literally just based on when we lose the slope line. So the histogram goes below the slope, back test it, gets rejected. That's literally the opposite signal of right here, especially with bearish divergence. It's literally the exact opposite. So that's a sell signal. And what happens after that? You know, sells off pretty aggressively. So if we go from the sell signal to the buy signal, we skip out another 22.5%. And that's not trying to sell the low or anything. It's literally just from when it tells us to exit to when it tells us to enter. So here's our next entry. We look right here. It's when the histogram crosses above the slope line. As soon as that crosses above, this is what happens next. And again, I mean, it's not rocket science. So, you know, 23% if we went by the buy sell signal, 66% if you just, you know, sold the absolute top like a stud. And then again, this is our next sell signal. Pretty choppy through here, obviously. Who would know what to do? Why not have some kind of system that you could trust? Oh, look. Well, when the histogram drops below the slope line right here, what happens after that? Goes down another blah, blah, blah percent. I mean, who cares? You guys get the point. You're missing the point. 15% you dodge out on. So we've dodged like 50%, 15%, 22%, all these like 66% to the upside. And all we did was like the most simplest thing ever. When the histogram goes above the slope line, we buy. And then that just so happened to line up obviously with the other one. So that's what we call the confluence. That's how we get the big daddy trades. 95% if you want to go to the wick, 99%. If you want to go just to the cross down right here, 67% to the upside. So, I mean, you see how simple these different things that we're doing are, but when we stack them on top, okay, the same way we make a fucking cheeseburger, sure, bread is good. I like bread. Oh, meat? Some juicy beef? Yes, of course I like juicy beef. Oh, you want to slice a little piggy pig, nice and thin? You want to sizzle it up and throw that on top, a little bacon? Okay, all right. What about some vegetables? Oh, you like mushrooms, tomato, lettuce? I'm gotta have some cheese, right? We're building a fucking cheeseburger. That's all we're doing. Or for you ladies out there, we're making a sandwich. Sorry, I should be more relatable to the women. So all we're doing, we're building cheeseburgers. We're making sandwiches. We're just doing a bunch of simple stuff, but we're doing it all together. And you know what? It works. Well, I mean, so far, it worked every time that we looked at. It worked really, really well. Another 18%. And what just happened? Triggered the buy signal. Daddy got his signal. Okay, the histogram's back on top. We're on top of the slope line. Does this have to be the bottom and we just go to the moon after this? No. Break back down, give us a false signal. It could definitely happen. But that's it. That's what we look for. So, like, it's easy to like look at stuff in hindsight and be like, oh, we looked at this and that lined up and that lined up and that lined up, and then we hit it. We're looking at this one in advance. I mean, we always do in advance. I mean, like multiple days a week, obviously, but my point being that we look back on stuff and we're like, oh, look how good that worked. Like that, I mean, it's kind of like, sure, of course, in hindsight it did. And not everything's going to work. Maybe this will be the one signal that we don't get. But I mean, when I look at this chart and I say we're at the ascending support that we bounce each other time, we just got our long-term buy signal, you know, crossing above the 200 simple and exponential, both slope to the upside, which is what, you know, how bull markets look. We did all that with the buy signal from our little histogram right here, bunch of greens. I'm taking a shot. It's worth a shot on this one. So just to the top of the range here, back test potentially 786, 65%, stop loss like 12%. It's like 5-to-1 risk reward trade. It's worth getting out of bed for. I mean, something to write home about. It's pretty good. I'll give it a shot. Probably go to zero. Probably lose everything. Isn't this one of Sam Bankman-Fried's investments or whatever? Didn't he make this? Isn't this Sammy Boyce? Didn't he make Matic from prison or whatever? I don't know. I don't follow these cryptos. Can't keep up. So gold, let's talk about gold here. Been meaning to do a long-term video on gold. Really need to crank one out for you guys. But same type of thing here. Basically, we're back on top of the 200 exponential and simple. There's slope to the upside. We're pushing up here. We're up against some serious long-term resistance. So without getting too crazy into the gold chart here. I mean, the gold chart's just crazy altogether. But, this is that gigantic cup and handle that no one else in all the world has ever noticed except for us. We're the only people who have identified this. Also, we're the only people that know how to use sarcasm. We even pointed out directly on stream. Obviously, this is not sarcasm, but so giant cup and handle. We're at the resistance. So on the monthly chart, that's the peak from 2011. That's the peak from 2020. That's the blow off top from 2022. And that's today's candle. So, I mean, we're at resistance. We bang up against resistance enough times. What happens? We get that measured move, that boom shakalaka, the 1.5. I mean, the initial target to the upside is like 2,200. Not a big deal, 10%. So, I mean, I'm like, maybe not the best time to be like, I'm going to speculate on gold with like record high prices and like record high, premiums. And then when it's all said and done, I'll, pay a 5% premium at record highs. And then the move I'm expecting is 10%. So if I sell back out, I break even and I'm right. So not really like great time to like trade gold necessarily, but maybe not a bad time to preserve some capital with a little bit of that hard rock, that shiny metal. 2,600 is 1.5, 1.618 is 2,800, and the big daddy measure move is 3,800. So a dub ski, a double up. We'll see. Gold probably goes straight to zero tomorrow. Matter of fact, I heard it's going zero tomorrow. Silver. So silver's got this long-term resistance right here. It's pushed up above it so many times, and it just cannot get above. It's finally above here. It's trying to push up. It's looking okay. Pathetic compared to gold. Looks like complete trash, garbage, useless metal right here. But if it gets its shit together, realistically, I mean, just put in a new high, silver. Just grow a set. Nat gas still down here at the lows. It's a little off the lows, like above $2, but I mean, we know that historically this is the bottom of the range. So realistically, we had a crazy breakout. Things got nuts when people were afraid. And now we're just at the bottom of the range. So we buy support, we sell resistance. Maybe it pulls a Bitcoin on us and goes to zero, but more often than not, buy support, sell resistance, do it over and over again. And on a long enough time frame, you'll be a winner. Neo looking like trash here. So we bounced off the lows there. We're back at it again. Look, I'm not going to dilly-dally around with this dirty little girl right here. We're histograms on top of the slope line, which is what we want to see. I mean, but if this thing starts messing around here too much, it's probably going back down to the lows. And I'm not trying to take a large haircut on this. So we'll see. We'll give it like 1 or 2 more days. If we take out that low right here and start closing below 885, I'm just going to get out and reevaluate. And I'm sure it'll pop up immediately afterwards, but got to be disciplined. So Baba melted back down here. This is that gap fill we were talking about. So if you did miss out on this opportunity, we'll see when we come here. I don't love that we're losing the 200s. And honestly, if you were like late to the party, maybe there's like something there for that. I don't know. We'll see. I'd rather just get it on support on the gap fill. And we'll see. You guys know I have not been particularly bullish on the whole China reopening. Like we nailed some of these scalps back to the upside and everything. But I mean, we know now it's fake. The whole China reopening and the spending of the money and the everybody's going to win. Now it's like, oh, it's the water shortages and the burning of the coal. And there's just always something. Baidu. Back testing the 200s here, putting in a very similar, signature to like what we're seeing in like the Dow Jones and some of those. So we'll see what happens right here. The 200s are just key support for any of this stuff. You know, we had some crazy bounces on these China stocks and a lot of tech stocks. I mean, cryptos, all kinds of stuff. But the truth is, they just need to hold above the 200s. And we're going to find out very soon across like a bunch of markets all at once, whether or not we're really going into a new bull market or this is just a fake out. So in my opinion, if we can manage risk off the 200s, the closer we are to that level, the less we have to give up to find out if we're wrong. So the entire uranium space looks like complete trash, obviously. So just hanging out at the bottom of this. I know like the uranium guys are like really pissed right now because they're like, this was supposed to be the golden trade. It was a great trade. It was an absolutely amazing trade. You were just late to it. So, you know, we bought when you were supposed to buy and you bought during distribution. So I'm sorry, uranium guys, maybe diversify your portfolio a little bit. Don't get mad at me. If it was up to me, everything would just go to the moon. We would all be rich and none of us would have to watch streams or make streams. We could just sit on the islands with the girls and the drinks. And yeah, I mean, life's just way easier in a bull market. So don't get mad at me. I'm just saying it how it is. I don't know why the uranium people are obviously just way too heavy in this stuff because I always get so much pushback, but we're below the 200s. There's a ton of other assets that are above the 200s. So momentum wise, this is trash and it's a giant descending triangle. Can it bounce back up here to the upside all the way back to like 21? Yeah, it definitely can. We could have another like 10% bounce or whatever, but every single time is a lower high and just that same basic low. So in my opinion, the real danger on these uranium stocks is to the downside, which is where we're looking to buy at on the push down here. So, you know, when you're looking to sell because you get tired and you're exhausted and uranium's just kicking you in the nuts every day, just know that you'll be selling to us. We'll be accumulating your losses. Wait, I don't think that's right. So Lulu, man, this thing, I'm telling you right now, this thing looks to me like it's getting ready to at least close part of this gap right here. It's a massive gap. It was some big bullish news, you know, with the earnings and whatnot and the projections going into the future. And I'm pretty sure there was an announcement that these were not only going to be carried in Walmart, they're going to start carrying them at the dollar store as well. So now you can get your dollar store sweatpants from Lululemon as well. So, but just be careful. This thing's getting ready to gap back down. We had a nice, beautiful gap up trade right here. It has done absolutely nothing. There has been zero buying coming in at this level. So if I was a bull and I missed this, I would be trying to push the price back down so I could get it at a good level. And if I was a bear and I was part of this, you know, which arguably we are after this big gap up, you know, we want to take profits through this level. So, and then we can potentially rebuy lower, or if this starts to break out, we see some momentum, we take out this previous high at like 386, I'll get bullish again. But we're seeing the momentum come out of this. We're seeing it start to roll over, and I do not like giant air pockets and standing on top of them. Speaking of giant air pockets, and this is another thing too, is this is GameStop's chart right here. So GameStop is obviously trash. So when it gaps up and does stuff like that, we expect that because it's trash. You don't expect that from like normal stuff. And then just going sideways. So do I think it's going to come back down here, close the air pocket, close the gap? Yeah, I do. I definitely do. And someone just told me Bed Bath & Beyond at new lows. I thought that was a sound investment. I can't even believe it. That's crazy. Triple M, ticker symbol. This is it. We're consolidating at the lows right here. Yeah, so this is my trade. Obviously don't do it or you'll lose everything because it's garbage. Jesus, what is happening? What time frame is this on? 21% upside for the back test of the 236 and 5.5% stop loss. So like 4-to-1 risk reward ratio. So it's probably garbage. I'm sure it's not going to go up here. Probably go straight down, straight to zero. But it's worth a shot. And then it could get crazy. Everyone wants to get carried away. But this thing's been melting down forever. But I mean, we're basically at what I would say is at least a temporary support here. We have those lows. We have these highs. It makes a channel. We're at the bottom of the channel. The channel lines up at the Fibonacci's, you know, the 0.5. If we're not going to stop right here, I just want to get out of the way of this thing and let it fall again. And then we'll potentially look at the 618 at like 83. But we'll give it a shot. We'll give it a shot. Starting to build up some momentum here. And still just hanging out at the lows. Blue slope line. Price action above the slope line. We did that thing earlier with the histogram above the slope. So you get it now. We're learning. Hard buy coming out of the bearish control zone. A little bit of momentum. It's going nowhere. Very, very close to that 821 bull cross. Last time it had a little run. The time after that, little run, and it failed both times. You know, obviously probably going to fail again. That's why we're not just like drawing this straight up to like all-time highs. Nope. Just looking to come back test some resistance and then get rejected and go straight to zero. I think this one was a request. Yeah, okay. So Upstart, this was one of the requests that we were looking at. So bounce off the low right here, put in a slightly higher low. That is definitely a good sign. 821 bull cross. And I think this was the setup that you were looking at. The 56% upside for the back test of the 236. Stop loss if we close back down below the 821. So if this bear crosses back down, we got to reevaluate. At the absolute bare minimum, for me, when I'm trading something that just completely melted down and is total trash, obviously we should be bearish on it because it's below the 200s. Obviously, since way back here, this thing has been trash. So the only thing we really know to like when to buy is like either Fibonacci extensions or some kind of momentum indicator oscillator or something like that. So we use the 821 bull cross, or we use like the histogram above the slope line for like some kind of momentum, showing us that there's some interest, at least in this thing, for a potential scalp. But when we take that scalp, it's a counter trend scalp. So we assume that it's got like, you know, a 30% chance of playing out. So 2 out of 3 times it's not going to work. And then when we do scalp, we're looking to take profits early and often at like key resistance, moving average, you know, whatever we're using basically. In this case, Fibonacci's, moving averages, etc. But just early and often. So, you know, get out of a trade when it goes against you, take profits on a trade when it goes for you, leave some of it open or whatever, but very, very risky, or just a lot more risk, I should say, trading against the trend. And here the trend is obviously to the downside. So these AI stocks, so this one is C3 AI. So still at that area. This is the key support here in red. Obviously, we've been talking about that level. It lines up with the 200 exponential. So we had that little push out right here. That looks to me like a throwover. We're trading in a very, very clear defined range. We break out of that range, completely fails, and comes back down to the other end of the range. That's a throwover. Typically, that will give us enough momentum. We'll come back up to the heart line, give us enough momentum, and then we'll see a breakdown. When it does break down, I'm looking to buy somewhere down here in this range for a potential scalp move off of like the 200s, as this potentially is bullish. And again, you know, this is the bubble that everybody's talking about. This doesn't look like a bubble. It looks like maybe it was in a bubble here. Doesn't look like it's in a bubble right now. I mean, that was an aggressive move to the upside, but you know, there is some potential right here. There's a lot of big names in the space, you know, obviously Microsoft, Nvidia, other big leaders, but some of these other like little trash companies, they have tiny little market caps. So, you know, people are always talking about like gold miners and like, you know, trash bot stocks. I think they all went to zero by now, but you know, this is like the same thing. This is your gold miner. This is your trash. It's garbage company. You know, fundamentally, it's probably complete trash. Maybe they have some product or whatever, but that's trash too. And we know that. We know these are all trash, or they wouldn't be trading at $2 fucking dollars. Good stocks aren't $2.82. Okay? It's a fact. All right? The same way with cryptos. Good cryptos don't cost $2. That's what a lottery ticket costs. So remember that. Remember that. So SOUN, Soundhound. So got that aggressive pullback to the 236 to the 618 in green. Back test, internal retrace, touch the 236 in light green, dark green, whatever it is. Perfectly. I mean, that was it. And now it's just hanging out at resistance support. If we close above those levels, probably pushes to the upside. If we get back below those moving averages again, probably goes lower. It's trying to build some momentum and get another push up here. BBAI back on top of the 200 exponential and simple. Got dangerously close down here. Hit the 618 perfectly. Closed part of the gap. Just said F it to this little air pocket right here. So does it ever get closed? I don't know. Buy, sell, buy. It's not the cleanest signal. Bunch of green histograms pushing up against the slope line. Back test and resistance. This is it. If we clear this level, you know, we probably at least retest the highs right here. We flip both slopes blue. We're very close to doing that right now. And likely this is just the beginning of a new bull trend in a lot of stuff. Some of it good. Some of it trash. But a lot of it. So AMD, so that's done. That was a nice little breakout trade right there to anybody that took it. The descending channel, breakout, measure move, back test, 200 exponential and simple. blue slope, flip to the upside, hit our target here, clear resistance. So maybe we come back down here one more time and retest the 200s. Here we have one right away. So oftentimes when you test them right away and then you burst to a new high, you're not going to get down to that level again. So realistically, I think closer to like 87 is probably an area to load up. It was a pretty aggressive move to the upside. We do see a sort of like, I mean, pretty clean 5 waves right here. 1, the 2 retracement, the 3, the 4. The 4 doesn't violate the 1, and then the 5. And we see the 3 is longer than the 5. So it obeys all of our rules. It's also like arguably a little channel, maybe more of like an ascending support right here. There's a lot going on here. But basically, we're at that level, kind of pinched right here, where realistically, we're either going to break out past this resistance to probably 118 or so, maybe like a close to like 15-20% move from where we're at right now, or we're about to break down from this level, revisit the 200 exponential and simple, or the bottom of the channel, which is fine, because if we look at from the bottom right here to the top, the initial 236 retracement is 88. After that, the 200s and the 382 all line up right around 80. That would be a good buying area I'm going to be looking at, and then potentially 0.5 at like 75. If we break down lower than that, 618 in like the high 60s, you know, then we have to really look at, all right, is this actually over? And we're just getting ready to do, you know, that A, B, and then C to new lows, which is very possible because we bounced the macro 236 literally perfect. And then we back tested key resistance and topped out at the resistance, literally perfect. So we know this is trading very, very technically. So what we want to see in a bull case is the 382 hold, but a clear back test and then buying come in. And then that can push us to the upside. But if you don't ever get the back test, you don't really know if anybody's going to buy. And that's why a back test is so important. You break through a key area and then, you know, like to the downside or to the upside, let's say a situation like this, we break out. If we don't get this back test right here and we just break out and then it just keeps ripping to the upside like this, eventually at some point in time, we have to get a back test so people know that when it's time to sell, there's people buying, and then people see other people buying and they go, oh, I'm not going to sell anymore. But if nobody ever sells and we just go parabolic, there's no actual support. So this is the structure we want to see in a market: a push up, a retrace, higher low, a push up, a retrace, higher low, and we don't violate the previous high. A push up, a retrace, you know, potentially higher low, potentially don't violate those highs, you know, potentially slope line moving to the upside. That's all beautiful. That's what we want to see. When something just goes straight up, it goes straight down too. So this thing had been, you know, chopping down the whole way, building structure to the downside, and now it's chopping up here, building structure to the upside. And honestly, that's what we want to see. So, all right, we did it, guys. We made it to the end. That was everything I had on my list today. Hopefully everybody had fun ripping through some trash assets. So with any luck, the dollar will melt down, Bitcoin will stop being a little bitch, and altcoins will just explode to the upside so we can lock in those gains right before everything else goes to zero. So make sure to sound off in the chat if you caught the stream today. Appreciate you tuning in. Hex Evolve, Mr. Lex, good to see you again. Crypto Deli, do you think gold breaking out will affect Bitcoin? Do I think gold breaking out will affect Bitcoin? Not really. I mean, here's the thing. The fear trade is why gold is bullish right now. People are afraid that the world's going to end. People are afraid that governments are going to keep printing money. People are afraid that we're going to go back into, you know, inflation or hyperinflation or, you know, devaluing of a currency, which are all legitimate fears. That's why Bitcoin's doing well right now, plus momentum. And that's, you know, gold is obviously doing well for the same reason. So if we go into recession, if we go into depression, if we go into inflation, any of those scenarios, gold does well historically. And actually, I have a long-term gold video I'm going to do. And it's super important because when you see it, you'll be like, holy shit, this is it. This is that crazy point in time where everybody points back at and goes, oh my God, that was the point in time where everything changed. And you're like, so wait, does that mean bullish or bearish? I mean, that's what the video is going to be about, so I don't want to spoil it. But anyway, so that being said, stay tuned for the gold video. But realistically, gold and Bitcoin are trading very correlated, like recently. So the fear trade for gold is the same as for Bitcoin. It's the devaluing, the banks going out of business, the, you know, world ending, the government taking your stuff. Like, so as long as that fear trade's going on, I would expect Bitcoin and gold to stay correlated for the most part and pretty much do the same thing. But the truth is, we really know that the big dick dollar is in charge of everything. So as long as the dollar is going down, that's really good for Bitcoin and gold. We know that historically, because when the dollar is going down, they're doing well, and vice versa. So dollar is literally like making new lows down here. So if we take out that previous cycle low like we wanted and get that last push down, that probably correlates with another big push up in Bitcoin and gold, silver, shitcoins, etc. But realistically, that's probably at least like a short-term bottom. We're looking for just one more fear event. Like if I could just hear one more person possibly talk about how the world is de-dollarizing and it's the end of the dollar and the dollar's going to zero, because I promise you, that's the bottom. It was the exact same way with Tesla. Remember, we talked trash about Tesla while it was at the highs, and then it drops down to zero. We buy it at zero, and then it shoots straight back up. What was everybody saying when we were buying Tesla? It was how Elon Musk is going to destroy everything. Twitter's falling apart. Tesla can't make cars anymore. There's too much competition. They're losing market cap. There's no profits to be made. Nobody wants electric vehicles. China's going to kick him in the dick. There was like a billion things about just why Elon Musk was a complete failure, coming from all the same people that like have been hugging on his sweaty balls for how long. So that's how we knew. We knew it was the bottom because everybody else hated it. And that's what we like. You know, we see that ugly girl at the party, nobody's paying attention to or whatever, you know, and like an old 90s movie, you know, we find like the inner good in her, and then we become really good friends and have a relationship. Or like, you know, the rated R version or whatever. But that's it. That's what we're looking for. We're looking for the ugly girl at the party. We're looking for the unloved asset. We're looking for the, you know, car with a little rough paint job. Clean it up a little bit, shine it up, polish it, and then give it to someone else. Okay? That's what it's all about. So honestly, I think we're at a key point right now where, I mean, when you start seeing gold advertisements literally on like everything, billboards, YouTube, all over the place for fucking gold, it's probably the top. It's probably the top on gold. Okay. I mean, it was the same way with crypto. So I would just be real careful making any like big financial decisions based on what's going on right now. I think we're very, very close to finding out a macro trend that's going to last for literally like years and be just easy money, whether it's easy money, you know, hedging, shorting, longing, whether there's inflation, deflation, whatever. We're very, very close to seeing macro trends like flush out. So when that happens, if you're watching this right now, you're going to be prepared for it. It's not going to just happen overnight. And that's what we're really looking for, that macro big boy trend. Right now, when we look at these charts, there's been very, very little time in history where we go back through and look at so many assets and they're all like at or around the 200 moving averages. I mean, that's insane. That means basically everything is fair valued, because that's what we're essentially using the moving averages for. It's basically just a horizontal support, but it moves with price action. Bitcoin to 10K, comma Betty. Yeah, I don't know, man. Might have missed the opportunity on that one. I've been talking about gold breaking out for the last 3 years. You have been talking about gold breaking out for the past 3 years? Yeah. What do you mean? I've been talking about gold breaking out since 2011. I mean, it's a big deal if it breaks out. If and when it breaks out. But what you have to understand is, Hex, is that if you look at gold in dollars, it hasn't broken out, or it barely broke out to new highs. But if you look at gold in like literally any other currency, it's crushing it. It's killing it. So the only reason that gold doesn't look way, way, way fucking better than it does is because we're looking at it in US dollars. Go look at it in any other currency and see what it looks like. Gold's crushing it. It's only because the dollar is strong. And, you know, we talk about that quite a bit. A lot of people don't realize that, you know, because everybody's like, oh, the dollar's dead. It's trash. It's going to zero. The dollar's been getting creamed since 1960. Well, sure. When did the dollar put in its low? Oh, 2008? So, I mean, how much of a dumbass do you have to be bearish on the dollar since 2008? And it just put in a new high. You know, I mean, here you could be like, wow, that was just a dead cat bounce. It's going lower. Oh, and then a higher low. And then, oh my God, it's going parabolic. And then you're like, that was it. Blow off top. And then, oh, another higher low. And then here you're like, oh, thank God, finally a lower low. And then you're like, oh no, a higher low. And then parabolic, new high. So anybody that's been bearish on the dollar since the low in 2008 to now it's 2023. I mean, that's 15 fucking years. I mean, how much of a retard do you have to be bearish on the dollar for 15 years? So sure, if the dollar and gold are inversely correlated, I mean, if the dollar is going, arguably parabolic and into the most bullish trend it's ever been in, since the crazy times in the 1980s, when we were above the 200 exponential and simple moving average like we are now on the monthly for the first time literally ever on this chart, I mean, of course gold's not going to look amazing compared to dollars. But it's only the dollar's strength. That's the only reason gold doesn't look better than it does. But since I live in the United States and, my bills and my monies are denominated in dollars, it doesn't do me any good. You know what I mean? Because I'm not gaining anything. If gold and the dollar both go parabolic at the same time, my dollars might go up faster than my gold, so it's pointless. It's only if that gold is denominated in another currency. If you live in Turkey right now or something like that, look at a chart of gold to the Turkish lira. It was a great investment for them. But yeah, I mean, gold, look at silver. Silver's been looking, to potentially break out since fucking the 1980s. I mean, this is probably the saddest chart in history. This thing makes XRP look like a little bitch. I mean, look at this thing. The silver high was in 1980. And then it went to a low down here, 1990. So 11 years it melted down and it lost, and this is silver. Okay. It doesn't actually do anything. It's trash metal. It's fake. It's from aliens. Can't use it for anything at all. Not even jewelry. 92% it melted down over 11 years. And then it took another, freaking, 20 years to get back to the highs again in 2011. And then in 2011, topped out, sold off 50%. So yeah, we've been talking about stuff for a long time because this has been, working out for a long time. So, I mean, if we're looking at this chart and we're looking back at a point from 1980, and it's 2023 now, we have 43 years of history building this pattern right here. So when it breaks out, sure, it's going to be great. It's going to be epic, the measure move, and it's going to be crazy. But I mean, I wouldn't plan on it anytime soon. Like think about how many people got super excited right here and they were like, oh, this is going to be at 30 years. Finally, silver's going to new all-time high. And then just pure disappointment again. Just soggy cereal. I mean, just horrible. So, if I talk mean about XRP because it didn't put in a new high in the last cycle, I mean, what are we saying about silver? And people are like, you're mean to silver. Silver is good because the apes, and they're going to use it for the solar panels. Well, I mean, according to this chart, silver is like a wet fart, okay? Nobody wants it, but we've all got some. Sorry, that wasn't the best. But yeah, I mean, so sometimes this stuff takes forever, but do you want to hang your hat on silver? Is this a good investment? Is this a good trade? No, not really. But the truth is, from that tip up here in 2011, resistance, 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 and we're trying to break out right here. So realistically, next push up to about $28, and then after that, we're just internal retrace to 35, back to 50, and then all of a sudden, maybe other people are talking about silver too. Probably not though. It's trash. It's definitely going to zero. But yeah, I mean, sometimes this stuff takes a long time to play out. That's why we're not really looking to, invest or trade silver. The best thing to do with like precious metals, in my opinion, is, treat it like insurance. Put a little money away in some metals every month and hope you don't ever need to use them. But the beauty is, you pay your premiums for insurance and you don't get shit for it. At least with metals, you get a shiny doorstop or whatever. But yeah, that's it. And if you think it's bad, I've been talking about potential gold breakout, which technically it did break out to new highs like 3 times over, or 2 times now over the last like 3 years or whatever. But the fact of the matter is, I've been talking about gold since it was at 1300 because that's when I got bullish on it and loaded up, was at 1300. And then obviously at 2000, but everybody knew to take profits at 2000. But I don't like go out and sell my physical gold. But yeah, anyway, so we're going to wrap it up right there. I appreciate everybody tuning in today. Everybody have a great night. Hit me with those requests for next time if you want. Obviously, this is our midweek market update. But we'll be in the group all the time and back on our Sunday evening market look ahead. So big week coming up. Obviously, we saw some inflation prints right there. We saw a little tick higher, a little tick lower. I mean, I'm not really sure how important inflation is anymore. I don't think anybody really cares. I think everybody's pretty much just accepted it right now. Nobody thinks it's getting back down to 2%. People want to know about the Fed. I said no on the next rate hike. Maybe we get another 25, but realistically, we're at least getting close to the pause, or at least no more increases, which I guess would be a pause. But I mean, who knows? May resume after that. So, all right, we'll wrap it up there. Everybody have a great night. Remember, obviously, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. It is 4/12/2023 at 9:13 p.m. Eastern Standard Time, and I am Crypto Trend Trader, and I'm getting the hell out of here.